In this AMT Insight, I want to talk about inflation and what that might mean for base metal prices. So currently the global economy is in a strong reflationary environment. So what that means is that you've had this post-downturn phase of strong economic growth triggered by policies really designed to stoke inflation. And the policy drivers of that reflation included big increases in the global money supply, huge increases in government spending and projected and committed government spending through infrastructure packages, such as what we've seen in the EU and the US. And then you've also had big cuts to interest rates and also cuts to taxes and other costs to businesses. And these policies have really driven the bull market that we've seen across most risk assets over the last year. If we look at base metals specifically, we can see that historically they've had a very strong correlation with inflation expectations. And we saw the strong pickup of inflation over the last year has really been combined with a big increase in commodity pricing. So I think the growth that you see in the economy and the rebound you see in the economy has triggered strong physical demand. You also have had the impact of the weaker dollar. And also because the money supply has increased so much and real interest rates are so low, investors are really moving into commodities as they try and hunt for yield as something to protect themselves against inflation. I think commodities has always proved quite a good inflation hedge because the commodity pricing tends to be quite elastic and responsive to cost pressures. I think that you can also see that excessive inflation can be quite bad for metals. Because it threatens economic growth and financial stability and so-called stagflation. And that's something where you can also see that trigger policymakers to tighten policy, which then you might see an increase in interest rates, for example, and the strengthening of the dollar again, and therefore a reduction in economic growth. I think we've seen some of that excessive inflation fear come in over the last couple of months, and we saw that in the big surge in US Treasury yields. And that really was combined with a strengthening of the dollar and a weakening, or at least a pause of the base metals rally over that time. Although what we saw from that was central bankers really coming out quite strongly against any fears of excessive inflation. I think they see it as largely something that's going to be quite transitory as the economy recovers and as we get over some of this global supply chain disruption that we've seen. And the dollar has subsequently started weakening after those fears of excessive inflation have eased, and we've seen the metals rally resume accordingly. The other pressure there, I think, from high commodity prices is that we're actually contributing to inflation in some cases. So we can see in terms of producer prices in the US and China, quite strong month-on-month growth over the last few months, really partially as a reaction to increases in commodity prices. And we've seen China policymakers react quite strongly to that in terms of saying they want to strengthen regulation on commodity pricing and try and reduce the impact of that inflationary pressure on businesses. So that's something that we want to watch out for as well. So in terms of the outlook, I think the reflationary pressures are something that are going to continue to support base metal prices, I think at least over Q2, as the rest of the world outside China starts reopening, particularly in the US and the EU. I think there's a risk from the second half of this year that China policy tightening could start to see kind of a pullback of that growth and a slowing of that growth and support for base metals prices. But I think the longer term risk is kind of a major pullback in terms of interest rates rising, tapering of bond purchases by the Federal Reserve particularly, as that's something that I think will be a game changer in terms of these reflationary drivers that have been driving base metal prices over the last year. I think generally the Fed has said they don't expect that to happen really to a significant scale until 2024, but futures markets are saying potentially that could happen from 2022. So I hope you find that interesting, and if you'd like to subscribe to more insights from us, then please subscribe to our channel. Thank you.